The U.S. Federal Reserve Board is expected to make its first interest rate cut in more than a decade on Wednesday of this week. Our next guest is a trader who's watching trading action ahead of that event. Joining us is Larry Shover, Chief Investment Officer of Efficient Advisors. Larry, great to have you with us. This is a topic that is on the mind of investors around the world. Why don't we begin with gold? We may see a clear reaction there. What would you expect the reaction to be in the gold price if the Fed does what the market expects it to do on Wednesday?
Yeah, well, it's a difficult question to answer only because gold's rise over the past few months was more about it being a cheap hedge. Consider 10-year yields in the U.S. have gone down dramatically. That was the hedge. That was, what people went to instead of going to cash. And then people just started to look at gold as another cheap hedge. So all that to say, if we see a very big dovish surprise on Wednesday, we definitely could see gold catapult. Otherwise, maybe stuck in the mud until we get a clearer picture of what's going to happen next.
To what degree has the rally since June been based on what the Fed is expected to do tomorrow?
Yeah, no, I think you're right. I think it's a lot of it's on forward expectations on global central banks, not just the Fed. But I think it's one of those things where it's a relative hedge. When you look at all the safe havens out there, when rates went down as low as they did, the markets start to realize that gold was relatively a cheap hedge compared to rates.
I said tomorrow. Of course, I should have said Wednesday. That's when the Fed will make its announcement. Okay, let's move on to the U.S. shale oil and gas industry. There's been a lot of talk about that sector and the benefits or the effects that it may get from an interest rate cut.
Yeah, well, it's all about the forward guidance, in my view, because if you look at like oil implied volatility, even natural gas implied volatility, 1 month, 3 month, both of them are down 2 points. They're down about the same on Friday. I think the market's just consolidating, waiting for forward guidance because clearly a 25 basis point cut isn't enough to change the context for the oil market or the gas market. It's much more than that, and I think that's what the market's waiting for, to some context.
What about elsewhere in the world of commodities? Agriculture, for instance. Would agricultural commodities be affected by a rate cut?
Yeah, I think they could be, and that's the one sector most people aren't looking at. I mean, people are scratching their head, and why are beans up when all this trouble is surrounding us? But I do think the loosening of financial conditions and especially guidance would help that, especially with the bean market. Secondly, corn. Obviously, a lot more. The entrails are far more reaching than just what happens with the Fed, but I do think it's an area that people need to pay attention to.
How much impact do you think we've seen in the world of commodities from the U.S.-China trade dispute?
Yeah, that's a biggie, and that's something that's kind of been stuffed on the back page of the paper. I think I would move it towards the front right now because I wouldn't call it a stalemate, but it seems to be that it's dragging on, and they've made some concessions to talk later, but let's see what a man does, not what he says. So I do think it's something to be worried about, although if you look at implied volatilities, whether it be interest rates, whether it be FX, no one seems to care right now. I think the only implied volatility that's up right now is British pound.
What about the weakening U.S. dollar? It's up slightly today against the Dixie index, but it's the longer-term trend has been down as the posture of the Fed has adjusted. There, we're looking at the Bloomberg U.S. spot index versus the Dixie index. It has rallied recently, but what would a weaker U.S. dollar mean to commodities?
Well, I think a weaker dollar would be, bullish for most commodities. But the fact is, I personally don't think we'll get that. I mean, again, it's relatively so. I'd like to be, really careful what I say, though. I mean, I'm comfortable with the short U.S. dollar versus Canada, especially now that it's trading, back to where it was in the beginning of the month, and interest rate differentials have widened out to 63 basis points. So Canada's a different story, but overall, I think U.S. dollar isn't going to go down because you just have that, relative to what's going on at the ECB, Bank of Japan, et cetera. So I think that we might see a muted response from the dollar and not a big bear market anytime soon.
We began by talking about gold. What about silver? We've seen a big run up in the silver price as well. Where do you think silver prices might be going? Will they follow gold higher?
I think they will, only because solely based on the speculative nature is behind it right now. It seems like a lot of it is driven, used to be by fundamentals, and I think right now you got a lot of cross currents with managed money getting into it. Momentum doesn't have to be wrong. And I think for the short term, intermediate term, we'll see a continued or a sustained rally in the silver market.
Okay, why don't we finish with your trade of the week? What's your top trading idea in the commodities world for this week?
Yeah, my top trade continues to be the 210 steepening trade in the U.S. Treasury market. I do believe it makes sense. It's flattened out, just like the Looney's yield curve has flattened out a little bit, but I do believe after Wednesday we will see a steepening. So I'd be long the 10s and short the 2s, hoping to see us get back up to around 30 basis points.
In terms of commodities, which commodity are you watching most closely right now?
Yeah, I think crude oil. I'm watching that, and I'm watching that based on the fact that momentum has on the short term is higher. I believe that we're going to see oil a little bit lower than we do today, given just the other factors that are going on in the marketplace.
Larry Shover, thanks a great deal. He's Chief Investment Officer at Efficient Advisors. He joined us from Chicago. And that is the end of our program. Thank you so much for watching.